Hey guys, this is Ryan with TrendLizard.com. I just posted a video on AMD or Advanced Micro Devices. I think it's a good video. I think you want to watch it, see what's going on with AMD and what might be a great buying opportunity. But I wanted to post another one for you. I just can't get enough. I'm looking through my hot stock list here and found another really interesting one that may not wait another week for me to post a different video. So I decided let's go ahead and dive in on Twitter. It's at a very interesting point in its Elliott Wave pattern, and it's one I think that you want to take a look at. So let's take a quick look at the charts and see what it has to say. Here we go. Okie dokie, so here is our chart of Twitter. It was incepted back in 2013, had itself a decent little spike, but since then it basically turned down and went south, looked like an absolute dog for a few years. It hit about 75 at its peak very early after it was incepted back in 2013, went all the way down below 15, retested it again in 2017, and since then things have turned more interesting. So you can see the advance off the 2017 low, super apparent, slap you in the face kind of five-wave advance here. Very obvious into the 2018 high. Since then, it hit a high, it reversed, it retraced almost exactly 61.8% of this advance off the 2017 low, and now it's trying to bounce again. So 61.8% is a very important level. It is the basis of Fibonacci mathematics. It's kind of a natural magnet for a stock, for so many other things other than stocks, but for our purposes, for stocks. And so it found a low there so far and has reversed, and it looks pretty interesting with what is happening off of this low that was established here just recently. So let's go ahead and zoom in on this action here. Take another look. This is the five-wave advance. It's a beautiful move. Again, it's super obvious. It's obvious that where it started. It's very obvious where it ended. The pullback that emerged off the 2018 high is a very clear counter-trend three-wave move. All of this looks very bullish. And again, it hit almost at a perfect 61.8% retracement and has bounced since then off of October's low. So let's continue to zoom in, take a look at this bounce off of October's low. This is it. It's not as apparent by any means, but it still looks like a five-wave advance. As we know, basic Elliott Wave theory 101 is that five-wave advances dictate, or five-wave moves in either direction dictate what direction the trend is going in, and then counter-trend moves obviously play out against the trend. So everything we've seen off that October low looks pretty constructive, pretty bullish. Once again, just like we looked at it on the larger time frame, you can see that it bounced off of a 61.8% retracement. When we look at the shorter time frame, once again, it completed a five-wave advance. It pulled back, retraced almost perfectly 61.8%, and now it's bouncing, most notably today. It's up 6.2%. This looks like a counter-trend move. We'd love to see it continue a little bit higher to prove it, but this looks like it could be the setting for the start of a much larger advance, and it looks like a buying opportunity. The key is that Twitter, TWTR, stay above 3150 at all times. If it moves below that level, all bets are off. We're no longer interested. But as long as it's staying above 3150, this is going to look like it's the start of what could be another big five-wave advance. And again, if you pull it back out here, this could just be the first wave of a much larger five-wave advance. So if it continues to remain constructive off of October's low, continues this recovery we've seen basically off of last week's low, and head higher back towards the highs that were established back in late October here, it's a buying opportunity, and you want to own this guy as long as it's trading above 3150. As it continues, you want to trail your stop. Essentially, you want to just make sure that any up leg, including this one here, is never retraced by more than 61.8%, and that's where 3150 is. As long as it's trading above that level and you can trail it, you want to own it. That should be your trailing stop level, a 61.8% retracement of whatever up leg is currently underway. So again, Twitter looks bullish, as you can see. Super interesting point right now. I think it needs to be on your radar. I think it can be in your portfolio. If you want to own it, you can put a stop again at 3150. As long as it's above that level, the future looks bright for Twitter. So again, this is Ryan from TrendLizard.com. Have a wonderful day, and we'll do this again next week. Come visit us.